All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my also partner, Mr. Benny Allen. Hope everybody is doing well today on this beautiful Wednesday. As always, let's turn off all distractions, grab a pen and paper, let's take lots of notes, and let's make sure that we participate and engage. And as always, we want to make sure that we start our day off by taking massive action. And that action stands for accepting all possible losses before entering a trade, preparing you for any outcome, centering yourself, body, mind, and spirit, ensuring a balanced approach to trading, trust in your education, strategy, trading skills, and intuition. Imagine your trade successfully materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once the trade has commenced. All right, so let's get down to it. We got a decent amount happening today we want to be prepared for. So if everybody can hear me okay, drop me one in the chat and we will get things rocking. Perfect, appreciate it. All right, so let's slide over to trading economics. We'll take a look at the updates there. Then we'll look at the calendar. And then we'll dive into the chart. So, it's not on here yet. Okay. We'll start here. The U.S. inflation rate seen rising for the second month. Annual inflation rate in the U.S. likely accelerated for the second month to 3.4% in March from 3.2% in February compared to previous month. The CPI is expected to increase by 0.3% slightly less than the 0.4% in February. On the other hand, the core annual inflation rate likely slowed to 3.7%, the lowest since April 2021. And the monthly rate is expected to ease to 0.3% from 0.4%. So overall, the overall inflation rate, that it includes volatile items such as gas, right, and energy. Seen accelerating, right? We've seen oil push to the upside, which gets played into that overall CPI number. So that's the expectation. We'll see how the numbers come out later on today. We have Japan's 10-year government bond yield climbed toward 0.8%, while the 2-year yield jumps above 0.23%, the highest since March of 2011. As Bank of Japan Governor Ueda said this week that the central bank will further scale back monetary stimulus if inflation continues to trend sustainably around 2%. He also told the parliament that the BOJ will monitor upcoming data to confirm the strength of wage growth in line with the results from labor negotiations for this spring. Meanwhile, Ueda also stated that Japan's monetary policy is not designed to control currency movements, but he did warn, talked about this yesterday, that a policy response would not be ruled out if sharp yen falls start to impact the economy, right? So we mentioned this yesterday, and they're not going to rule out anything if things do not move sustainably and don't move in line with the actual fundamentals. Right, so we'll continue to monitor the Bank of Japan. The BOJ raised rates for the first time in 2007. We know that. It also abandoned the yield curve control and reduces asset buying operations. So that's the bond yield for Japan. That's it here on trading economics. Let's go over to the calendar. Last night we had New Zealand cash rate came in as expected, right? Some of the notes from that, right? They opted to hold the rate at 5.5 for the sixth time. They said the economy was evolving and anticipated with high interest rates reducing the capacity pressures and inflation. They kept it unchanged, and they also said that they see the restrictive policy staying there for a period of time to ensure that they get prices to or inflation down to that 2% target that they have, a 1 to 3% target range that they have by the end of 2024, right? So that's their goal. So they'll keep that restrictive policy, right? So right there, keep that restrictive policy as long as necessary to allow them to get to their goal. So we saw some strength in the New Zealand dollar based on that news, saying that we're going to keep it there. So we'll watch and see how things continue to evolve with the New Zealand dollar. Um, that was pretty much it from yesterday. We had PPI coming out of Japan that came in as expected at 0.8%, producer price index. For today, core CPI, this is where everybody has their eyes on, expected to tick up. The expectation is 3.4. Last month was 3.2. We'll see how that CPI number comes out. We'll also watch that core CPI data as well that removes the volatile items and gives the Fed the information that they're looking for. So we'll keep our eyes there. We also have FOMC member Bowman speaking at 8:45. Then at 9:45, we have Bank of Canada monetary policy statement. Going to be key for those Canadian dollar pairs. Really for the past couple of weeks, it kind of just been bouncing around with quite a few pairs. So looking forward to the volatility here and looking forward to give us the direction one way or the other. Then we have the press conference. We also have crude oil inventories at 10:30, FOMC member Barkin speaking, 10-year bond auction, and then at 2 o'clock we have FOMC meeting minutes. All right, this combined with the CPI data could definitely move the dollar up or down, and if they're mixed, then we'll see it continue to move sideways. And then tonight we got China CPI and PPI data, right? So that's today. Today starts the kind of uptick in the reports, in the information, in the monetary policy, and ultimately in potentially in the movement. So we'll watch things from that perspective to see how things go. All right. Any questions from a fundamental perspective? Nope. All right. Cool. Benny, good morning, bro.
Morning, how are you?
Oh, what's up, Jeremy? I'm doing well, man.
I'm good. I'm good. How are you?
Good, 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 dude. Glad to be here.
Right. Yeah.
Good morning, Ryan. How are you?
I'm doing well, man. How about yourself?
Doing pretty good, man. Big day today, eh?
Yes, it is. Yes, it is. Yes, it is. You got any thoughts on anything, man? Anything top of mind for you?
Man, nah, man. You know me. I'm sitting on my hands on a day like today,
Yeah,
waiting for the day to come out. I already got touched up last night. My New Zealand holding rate, so it messed up one of
yeah,
my I had a trade going pretty good and it got blown up. I mean, and it was expected for them to hold rate. So sometimes I don't get the volatility associated with some things that are expected, but it is what it is.
right. No, for sure. For sure. I feel you. I feel you. Sitting tight as well. So we will see how things go. All right, so let's slide over, take a look at the dollar. If you guys have any pairs that you want me to take a look at, drop those into the chat and we can take a look at those first. And then we'll kind of go through the pairs and we'll look at the dollar pairs, see what they are. Pretty much still range bound for the most part. But we'll take a look at those. But if you guys have anything top of mind that you want me to take a look at, we will do that first. DXY, right? You see us just pressing sideways here, trying to complete that right shoulder of the head and shoulders pattern. We haven't fully been able to break that neckline just yet, right? Yesterday we pushed down, then pushed right back up, and then we moved sideways. You see now we're headed back down to the downside. So we'll see if we're able to break that level and press down, and we'll see how it goes, if it's before the CPI data or if it's after the CPI data. We press down depending on how that data comes out. So that's where we are. We're just range bound overall on the DXY right now. All right. All right, cool. So that's where we are there. No pairs came through. Cool. So we'll just rock through. So we'll take a look at the UJ, and we're still caught in this range, right? We'll come back to the 4 and take a look at it, right? We're sitting at the top of the range here. Now, keep this in mind. Keep this in mind. Keep this in mind. If the data comes out stronger than anticipated, right? We'll see this pop up, all right? This pop into the upside, right? Puts us in that 152, 153 range that we've been talking about. And we're still watching the Bank of Japan, right? We just read Governor Ueda, he's not ruling out stepping in from a monetary perspective as well. So meaning if they have to change interest rates before their plan, right now the plan is around fall time, October-ish. But if they have to make a decision before that, they're not taking that off the table, right? So keep that in mind if we get this push to the upside. So also they're just overall intervention, meaning they'll come in and they'll buy yens to push the market back down. So watch your charts around that time, and we'll watch these yen pairs to see how aggressive these moves actually get. All right, so that's the UJ. Looking to see what happens here now. If the data comes in below expectation, right, we could see this just naturally come back down to the downside, and we'll see some of those yens potentially follow. All right, so we'll watch that from there. Okay, so that's the UJ. Any questions here? Nope. All right, cool deal. I got you, Joy. NZD CAD, we'll come back to the daily time frame. Walk through this. See, we are here, right? We have this beautiful 80-20 play out to the upside. We're still running long here, right? Coming into that 50% retracement level. We haven't had a pullback yet, right? So it's been since the first, so 10 days of straight bullish action, right? So at some point, we'll get price to move back down. What that some point is, not sure. We understand the Swissy, no, this is the Canadian dollar. So oil has been pulling back, right? And we got that rate statement coming later today. So we'll watch and see how that goes. If we're still buying into that rate statement, if price is still pushing to the upside, we could look for potential sellers to come in if the data comes in strong for the Canadian dollar, or the conversation is more of a bullish tone, right? So we'll see how that plays out there. But pressing to the upside so far. Come down to the 4. And here we are. We had an 80-20 scenario, but we ran to the D extension there, right? So that D has been hit on the 4. Now we're looking to see, do we get a reset, right? Do we get a reset? So coming back down to the 1 hour now, this is where we sit. We're just shy of that D extension. So depending on how things transpire, we could get price to, because when those rate statement comes out, price gets really volatile. We could get a spike up to hit that D extension and then turn over. So just watch that, and let's sit tight and be patient here and wait for additional confirmation, right? But this is an 80-20 scenario that's just been hovering in the zone, right? And we're looking for additional confirmation and a catalyst to turn this thing over and push it back down to the downside. Okay, so we'll watch that there and see if we get to that D extension before the news or after. All right, questions on the New Zealand CAD? Nope. All right, New Zealand Swissy. Let's come back here. New Zealand Swiss. Pushing long, right? We talked about this one a little bit. Couple different perspectives. On Saturday, we talked about this, looking for a deeper pullback here. We didn't get to that 618 level. So my re-entry on this one missed, but we're pressing long here, right? This is on the 1 hour. So let's go back, take these out. We'll take this out for now. We'll come back to the daily and look at this from a larger perspective. This is where we are here, right? So this is our 80-20 scenario that's just been taking its time, right? Since August, we're trying to push out of that zone, right? And we're finally starting to get some traction with that Swissy and the weakness coming out of Switzerland, right? So we're finally breaking above this daily level at 54,712, and we're off to the races. So I look for this one to continue moving to the upside here, right? And getting to at least at 382, taking its time, but it is on the go nonetheless, right? So now we come down to the 4. And let's zoom back. I think these pop in at some point. There we go. All right. And so there's our fib on the 4 as well. We just missed the 382 level there on the 4, right? And we came down in the zone, and now we're pressing out. So we're just pushing out of that 118 and 127 zone on the 4-hour as we're moving along. So in theory, what we were looking for, right? We got a nice break, and we'll see if we get price to push up, and then a pullback and retest that level, right? You see previous resistance all throughout. So look for a pullback and continuations long here. Okay, so we've had the direction right. It's just taking us time to get there, right? Tons of bouncing back and forth in the market. Okay, so now we come back to that 1-hour thought, and we'll run those fibs off the low again. Nope, not that one. From here. Nope. One of these. Come to the most recent here. That wasn't the fib that I had on there, but we'll take it. That wasn't the fib that I had on there. I had a larger move on that, but we'll roll with it for now. But the pullback that I was looking for, I didn't get. Interesting. So this is where we are, right? Headed long, headed long. So based on this fib, we got a 8-6 retracement pressing to the upside, matching the extension 54,895, right? And so as we get to that level, then we'll look for a pullback, retest, and continuation. Okay. Like so. All right. Joy, what are you seeing on this NZD Swiss?
I was in at the beginning of the move, but I ended up getting stopped out in profit, and I basically jumped in where I got stopped out at. And
Okay.
so I was looking at um trying to figure out if, Swissy was trying to gain some strength yesterday. And so just where my position is at, I mean, I'm gonna leave it. I'm at
Yeah.
uh, I ain't at my computer yet. I am at 54330.
Okay. Yeah, I think you're good there, right? Because that's right around based off this fib sequence here, right around the 618 level.
Yeah.
So even when that new fib pops in, right, wherever it lands, right, even a pullback could just bring you back to break even if it gets deep into the zone. But right now, Swiss franc is still on the dovish side. So and with the conversation out of New Zealand last night, we'll get pullbacks and continuations, but I don't see A's getting taken out anytime soon.
Gotcha.
Yeah, so I think I definitely see that New Zealand continue to push.
Okay. Thank
Yeah,
you.
yeah, ain't no doubt. All right, cool deal. Um, while we're here, let's take a look at the New Zealand dollar, and we'll clean this up a little bit. Let's go back to the daily. See what we have here. So daily time frame, this is where we sit overall. It's been a long, drawn out move, right? And so we'll look at these fibs shortly, but overall price has been coming to the downside, right? Just looking at the price action, it's been moving down. Okay, been in this range for a little while, but still making lower highs. Haven't made any lower lows yet though. Okay, so trend moving to the downside. Come down to the 4. And let's look at fibs coming off the low. All right. And so as price moved down to the downside there, that AB boundary got taken out, and then we got the flip and the push back to the upside. Okay. So this is our active fib sequence here, and we're pushing to the upside. Okay. So what I'm waiting to see is if we can push right into our sweet spot, right? So I have that idea sitting there, waiting for a high price. So we'll see if we're able to throughout the morning, and then maybe early afternoon, get price to push into the zone. All right. We get into the zone, then we'll see what the catalyst is, right? And turn over and push us down. Okay. So that one's moving to the upside right now, which, as we saw, right, those dollar pairs are pulling back, and we talked about it, right? Most of these dollar pairs had these crown patterns that formed, right? And so we're looking at those potentially finishing out anyway on their move to the upside, right? So we're seeing that action happening, and we're seeing price continue to push, which is cool, right? So we'll wait for price to move into our zone here. So be patient on that one, allow price to push. We'll see how things look coming into the 8:30 hour. All right. Questions. Let's go down to the 1 real quick. We'll look at that move top side. We'll pull that out. And we'll take a look at the 5 as well. But there's that crown pattern there. We'll just run the fib off the low. So that's where we are, just a regular fib sequence, pushing to the upside there. If we run the fib sequence for the crown pattern, which is the full move there, right? We got a 50% retracement. The matching D extension is there, which is right in line with that 618 level on the 4, right in that entry zone that we're looking for on the 4-hour time frame. So overall, right, fibs have price pushing to the upside and getting to these D extensions. So we got an 80-20 scenario here, but we may not get that pullback, right? We might see price push through this, get to the D extension, and then give us that turnover and press back down. All right. So we'll watch that one as the news comes out, and we'll see if we get the catalyst then to give us the flip on that. Okay. All right. Cool deal. Questions on New Zealand dollar? Nope. All right, cool. Over to the Aussies. Aussie dollar. Those that got on early saw my screen sitting on this one. So we came back to this daily level, 66,339. Haven't been able to break through it yet. We'll see what happens. But strong move to the upside, coming back to that level. Are we able to hold that and come back down? Okay. Are we able to hold that level and come back down? That's what we're looking to see here. Okay. So coming down to the 4, right? That's just back at that level. We got a 618 retracement here, just shy of a 618 retracement here, right? And so if we're able to hold this, right, we'll see if price can continue moving back down to the downside there. All right, so we'll watch. You see, right, things are slowing down ahead of that CPI data, which is expected. Okay, so it all depends on the CPI data, but we come here to the 1, and we have an 80-20 scenario here, right? So one of two things can happen, right? If the data comes in strong, it pushes this in our favor, right? If the data comes in weak, it pushes price against us. All right. Two options, right? So we'll watch and see. I did enter this one yesterday. So this is one that I am sitting in. I actually have my stop just above the high here. Like that. So this is one of the few that I am sitting in, but we'll watch and see how the data comes out and see what happens and see where price goes from there. All right, Jim, what you seeing on this one, man?
Yeah, I was watching it for an hour and I kind of and I I hit the fib, the sub fib to the downside. And I recognized that it was in the zone. And so
This fib
that
here?
was that was yesterday.
Yeah, that
I think check the daily. Yeah.
or daily.
Yes.
Stop it. It's
There you go.
unfair.
Yeah,
Yep.
yeah,
Okay.
yeah. And I was like, okay, it's in its zone, so I'm just waiting to see the data and if um kind of pull downwards, then I can short it. If not, then wait.
Yep. I follow you on that. I follow you on that. So yeah, we'll definitely see. Right. So if it definitely puts us right in that 618 retracement zone. And so the data will tell us, right? It'll push it in one direction or the other. So we'll continue to
Yes.
watch that and see how that goes. Appreciate you, man. All right. Any questions on that Aussie dollar?
No.
All right. Cool. One that is moving in our favor is the Aussie CAD. Daily time frame get pushed back into that daily level there, right? Closed above it, but you see we're coming back down, right? Coming back down below, rejecting out of that zone. So we come down to the 4, and this is the look on the 4, right? We were not able to stay inside that AB boundary, which we talked about yesterday, right? So price ended up pushing further up, took out the A. So when that happens, right, we change the direction of our fib. We start at the low, right, and map the fibs out to the upside, and this is what it gave us. Shallow retracement, just missed that 118 level. Just missed that 118 level, and we're turning over and pressing down to the downside. All right, so we'll see if we're able to continue this move down and give us a nice retracement that we've been looking for. All right, and what that looks like on the 1 hour is this. Right, shallow retracement that pushed us into that 118, 127 zone, right? And now we came back below, we retested the level, and now we're trying to make lower highs and lower lows. All right, so looking for that retracement to come, and then we'll see if we're able to get a fundamental catalyst news, right? See what happens with the Canadian dollar. If that's the catalyst, we need to turn this back over and push it back down to the downside or not, right? But this is the 80-20 scenario on the 1 hour time frame for the Aussie CAD that at the moment is pushing our favor. Okay, questions on the Aussie CAD?
Yes, sir, I do.
Eloy, what's happening?
Hey, not much. How you guys doing this morning?
All right, man. How are you?
Hey, real good, sir. Thank you for asking.
Good.
Okay, my question is, I've noticed that when you guys put your charts up, especially this one really brought it to my attention. Okay, you have a daily level right there at the 127.
Yep.
Okay, when I use, because I started using the smart support, smart resistance, I don't show any kind of level there.
Yeah. So that level, I put that level in here, right? We had this consolidation right here. So I
Oh,
placed that level in there. It didn't pop up with the smart resistance, right? But I
uh-huh.
placed that one there because I saw this consolidation here, which showed a form of resistance. So I placed that one personally.
Gotcha. Okay, so
Yep.
some of the
Yep.
levels, if they don't line up, like on my charts to your chart, those are levels you yourself put placed there.
Yeah, yeah. And right, just looking at it, we know, right, when we have consolidation, we have a high and we have a low. And so with that consolidation, there was resistance there. And
That makes
so,
sense.
right, just because Benny talks about, right, your eyes are your best indicators. And so just using that level, because it also will support here as well, right? So I wanted to just drop that in and see if price respected that level. And you see on the daily time frame it broke it, but it's coming back down below. So yeah, but that was a one that I placed there just based on seeing that consolidation there.
Okay. All right. Thank you.
Yep.
Appreciate it.
Hey, no problem. No problem. Great question. Appreciate you asking. All right. Any other questions on the Aussie CAD?
Nope.
Nope. All right. Cool deal. Um, I got you, Kiki. Let's do it. Gold and US 30. So let's zoom out on this gold and look at this. All right. The extension achieved. A, B, right? Shallow retracement, push to the 118 level, 80-20. Boom. Right? Came back up to the high, came back down, gave us a 618 retracement. C, deepest point in between the AB boundary, matching D extension. Boom. Right? We don't have a new swing high to form yet, right? So we don't have the D, which will be the new B in the ABCD sequence, right? So we're waiting for a swing high to form, but there you go, right? Beautiful, beautiful, right? And people say, "Oh, it's not gonna get there, not gonna get there." It's gonna get there, right? It gets there. So, there it is. So we got a D extension on the daily time frame. So now we're looking for a reset. Gold pushed it to the upside, right? Got a lot of uncertainty. Um, with the dollar's been retracing, pulling back. You also got geopolitical tension, right? And so gold pushing to the upside as that quote unquote safe haven, right? But as you're looking at this, right, there wasn't anything that said price was going to come down, right? Nothing. We broke, we retested, we broke, we retested, right? You see all of these levels here, right? Level of resistance there, break, pull back, retest, break, pull back, retest, break, pull back, retest. And now we broke it again, right? So price is just moving to the upside, just moving to the upside. So let's come down to the 4. And let's see. Trying to see if I got a fib to pop in on this one. Nope. So we'll map these on the smart fib. Boom. Yep. So just coming off the low here on the nope. Here. Yeah, that should have gone all the way through. Let's see. Got a different sequence there. Interesting. I'm trying to track the same sequence as the smart fibs as they have them laid out, and not quite there, but that's fine. So we'll run another fib sequence here, and those get taken out as well. So let's come to current price. So we'll run our fib off of this low here and just map them through. Boom. Still puts us in a similar scenario, slightly different than the smart fibs, but there we go on the 4, right? Shallow retracement, 118, 127 zone. We hit that daily D extension. That's this red line, and we're pushing to the upside, just shy of that 2377. We may get there, right? Gold is very, very fundamentally driven. So, right, we could see a push to the upside to get to that D extension, and then a reversal around the CPI data time, right? Depending on how that data comes out, or we could just see this thing run to the upside. All right, so we'll watch that from that perspective, but there is an 80-20 here on the 4-hour time frame. So those that trade gold, keep your eyes on it, right, and see if you get confirmations that you need after the data drops, right? You want to be patient and wait for the data to drop first. Trying to anticipate what that's going to be is like pulling the handle on the slot machine. All right, so be patient and allow price to do what it's going to do, allow the market to do what it's going to do, and then if your rules get met, then you pull the trigger. Then you pull the trigger. All right, so there are your fibs running to the upside. I mean, your trend lines running to the upside like that. All right, so patience, patience, patience. And we know we've seen time and time and time again, patience pays, right? So take your time there. Take your time. So that's on the 4. Coming down to the 1. Somebody had a question?
Yeah, this me. I've been in gold all week. I hopped in on the 5-minute sub
Okay.
there at 235,781.
235,781.
But
All
it
right,
looked like it want to push back up.
and you're looking short on that?
Yeah.
Okay. And maybe, all right, we'll see. Because see here on the 1 hour, right? And so having that higher time frame direction, we know we got a daily D extension. We know we're in an 80-20 scenario on the 4. We also got an 80-20 scenario on the 1, right? So whoops. There we go. So there we are there. 80-20 on the 4, 80-20 on the 1. So potential for reversal, right? But it's going to come down to the fundamentals of it, right? And getting that fundamental catalyst to move this back down to the downside. Okay, so that's something that we'll watch there. We'll go to the 5, see what Joy was looking at. Let's see. We'll just run these for sake of time. There we go. Those are off as well. That's interesting.
This is what I was talking about the other day.
Yeah. Yeah, no, that's definitely interesting. And Benny and I noticed it as well, or sometimes they line up and sometimes they don't. I'm not sure what the difference in the algorithm is that causes that shift. Interesting.
Yeah,
So you,
when in doubt, I go with the original way that we
yeah,
do it.
yeah, I agree with you on that. This your entry right here, Joy? Around here?
Um,
Or is it here?
well, mine's are still up, so it's on the last leg. If you drop down on the last leg, the last move.
Well, yeah. This move to the
Yep.
downside here?
Yeah.
Okay. So you're playing this to the downside. I got you.
Yeah.
I dig it. So if we there you go.
Yep, there you go. Yep.
Yeah. I follow you on that, right? Deep retracement. And we, like I said, we got 80-20 on the 4 hour, 80-20 on the 1 hour, right? And then you caught this, right? Push down and then a nice deep retracement. So in profit, I say just manage that trade, right? Maybe move your stop to break even ahead of that news. Because it can bounce. So yeah, just manage it, right? But depending on how that data comes out, we could see this continue to move to the downside, right? And those 80-20s on the higher time frame play out, and along with the C to D move here, that you're already in profit quite a bit.
And what's funny, because I was playing Ethereum too, Ethereum's kind of making, it's
Okay.
kind of, and not to say it's the same, but it's kind of making the same move.
All right. Interesting. Interesting. Crypto's moving similar to commodities. Interesting thoughts. Appreciate you, Joy. Appreciate you. All right. That's a great view there of that move to the downside. All right. Questions on gold. Kiki, what are you seeing on gold?
I was looking for gold to drop on 30 minutes. Can we have a look at the 30-minute, please?
Yeah. Let's looking at it like that. Is that your view there, Kiki? Or you got something different?
Oh, sorry. I was talking on mute. Yes.
All
That's
right.
like I got in on hold on. Let me check mine. Mine was around 2364.
Oh, beautiful. Beautiful.
Yeah.
Right off the highs here. All right.
Yeah.
Great work.
Yeah.
Great work. Yeah. I dig it. Right. So 4 hour, 1 hour, 30-minute, 80-20s. Right.
Mm-hmm.
So I like it. I like it. Great work.
And
Great work.
then I chickened out at 2340 because when I saw that pullback coming in, I chickened out. But my inner trend line had been broken, and the second inner trend line too had been broken. So I, it's the doubt, like
So
I'm
talk me
like,
through your thought process here. Right.
exactly, yeah.
Talk me through it. What were you afraid of?
Um, well, when I saw price pulling back and taking my profit, I I kind of chickened out, and also I was like, maybe it's not gonna go my way. It's the fear that's
Right.
holding me back.
But what are you afraid of?
Losing my account.
Are you over leveraged?
No, I'm using for Forex management.
So how much did you have at risk on this trade?
Um, I'd say I don't do percentage, but I
Okay.
do in lot size. Um, I was risking 0.25 or in a hundred
Zero.
thousand.
You got $100,000 account
Yeah.
and you're risking $2.50.
Yes.
$2.50 per pip. Uh, let's do the math. That's that conversion comes down to 35 pips, right? Not mistaken. 35 times 2.5. So you're risking $90.
Well, I think so.
You're risking, right? You're risking $90. So if
Hmm.
that trade went against you, if you place your stop outside the D extension and the trade went against you, you're risking $90 of your $100,000 account, right? That's
Yeah.
less than 1%, right?
Yeah.
Um, so I think one thing that might be beneficial for you is doing the math, right?
Okay.
Because the math will help you to understand how much of the account you have at risk, right? And then you can ask yourself, am I willing to risk 1% of my account or a 1/4% of my account or 1/10 of my account, right?
Mm-hmm.
And you're able to have that conversation with yourself to say, okay, I'm willing to risk $90 for the potential to make $150, right?
Right.
Or $200, whatever that would come out to. Um, but being able to actually see that removes the guessing and the emotion from the conversation,
Okay.
right? Because right now you're going based off of feel, and our feelings, our emotions can get us into trouble,
Mm.
right? Can get us into trouble. And so you challenging yourself to develop the discipline of doing the math so that you can ask yourself a yes or no question. Am I willing to risk 1% of this account for this trade, yes or no? Right? Not I think, not I feel, not maybe, but yes or no. And if we can write our trading plan from a perspective of with if then statements, if price does this, then I do this, and yes and no questions, we're able to craft a plan that helps us to remove the emotion from the conversation. So when the emotion does come back up, you can then refer back to the yes and no questions that you have in your trading plan, right? Because those emotions are normal, right? They're always going to be there. But the trading plan gives you those guardrails to allow you to bounce those feelings and those emotions off of. Does that make sense?
Yes.
Right. And hopefully this helps. Kay, you guys were having a conversation yesterday in the accountability group about trading plan and details and things like that. So hopefully this conversation helps give some thoughts and clarity to that for you. But if then statements, if price does this, then I do this, right? If price gives a shallow retracement less than a 382 and pushes into the 118, 127 zone without getting to the D extension, then I will look for a trade entry for an 80-20 to the downside, right? When calculating my risk, right? How much of my account am I willing to risk on one trade? 1/4%, 0.5%, 1%, 2%, whatever that number is for you, right? 1/4%. All right. If I'm willing to risk 1/4%, then each trade I will do the math, right? Dividing my risk by my stop loss, and that will be the lot size that I then am able to use for the trade that I take, right?
Okay.
And now then you have a checklist, right? Did price give a shallow retracement, push into the 118, 127 zone without getting to the D extension? Yes or no, right? In the scenario, yes, right? Trade entry confirmations, right? Whatever your entry confirmations are. Did price break the trend line, right? If you use trend lines as your confirmation. Did price break my trend line? And let's see. Let's zoom in here. Oops. Coming up there. Boom. Right. Goal of the trend line is get as close to the highest point as possible in the direction that price is moving without cutting off any wicks or bodies. Right. So we got some consolidation here. But depending on when you looked at this and when you entered this trade, right, your trend lines may have come like this. Boom.
Yeah.
Okay, cool. Beautiful. Right. So did price give me a shallow retracement push into the 118, 127 zone? Yes or no?
Yes.
Yes. All right, cool. Check mark there. Did price break my trend line?
Yes.
Yes. Check mark there. So now my trading plan says When price pushes into the 118, 127 zone after giving a shallow retracement and does not get to the D extension and then breaks the trend line, I will then enter my trade. All right. So price gave us a shallow retracement, 118 to 127. Price broke our trend line, right? Boom. I have an entry opportunity. I need to pull the trigger, right? Right? I have the entry opportunity. Then I calculate my risk, right? How much of my account am I willing to risk? 0.25%. All right, 0.25% of 100,000. No, that's not a 0.25%. 100,000 times 0.025, right? Is that 20? That's not 2,500, is it? Yeah. 0.25% of 100,000 is $2,500. Is that correct? My math wrong?
No, I think it's 250.
250. I'm sorry, 250. Not enough zeros. All right, 250. Right? All right. So I'm willing to risk $250. Right? So stop loss is 35 pips. All right. So 250 divided by 35.
Hey Ryan,
Sir.
real quick, I'm sorry, I had to step away for a second. My
No,
apologies.
all good.
So we're dealing with $100,000 account. That's a $100,000 straight cash, or is there a drawdown amount on that? Is it? I'm not sure what the. I think I missed
Yeah,
it.
I didn't ask that question. No, I
This a
apologize.
is
No,
this a prop account, or is this a?
I'm in profit, like $3,000 on profit.
But is it a prop firm account or is it
Yeah, it's a
an
prop
account with
firm account.
okay, so your real account then is $10,000.
Yes, I
There
learned
we.
that one from Benny.
Yeah, there we go. Got it.
Okay,
Appreciate it.
appreciate that, bro. I didn't ask that question.
Yep.
All right, so $10,000, right, is the actual account size. So that's what we should be doing the math off, not 100,000, right? So 0.25% of 1% of 10,000 is 1,000. 0.25% of 10,000 is 250. Right? Is that right?
Yeah.
All right. So we're risking $250, right? And our stop loss is 35 pips. Am I doing the math on that right? Because I know the conversion on gold is different. Benny, is that right? Is that 35 pips or is that counted as 350?
You're looking at for the if you're going off the 10,000, if you're looking at 1% of 10,000, right? So that's $100.
$100. So
Yeah,
okay.
that's $100. So you're looking at 25. So you would based on that $10,000 account, you would up your risk percentage on that.
Gotcha. Okay.
So you're gonna play out. It'll play out the you gonna up your risk percentage on that on gold on that
Explain that.
to make that play. I would risk. If I'm trading gold and I'm working that, I'm risking 2 to 3% on that. Is how I typically will play it
Okay.
on that asset.
Because
So I would
because of that conversion.
yeah, I would just up my risk percentage on that.
Okay.
Yeah. Yeah, that's how I trade it.
Gotcha.
Yeah, at least 2%.
Okay. Cool. And yes, I did my math wrong, guys. I apologize. So 0.25% is $25, right? Not $250. But like Benny's saying, so risk 1 to 2%, right, for the conversion. But if we went off the 1%, right, $100 at risk. Okay, $100 at risk. So then you divide that 100 by your stop loss, divided by, right? So you're able to trade that. And you did your math right, right? $2 a pip, right? Okay, mine is 2.8.
Yeah, she's
Um,
good on. She's good on. She's good.
right? So you're within your risk parameters, right? So you didn't necessarily do the math, but doing the math comes out to you were right, right? So now you have to have the conversation with yourself of I followed all my rules, my checklist was met, I have to live with the results, right?
Yeah, that's deep.
I have to because I followed. So even if the trade goes against you, even if the trade goes against you, for me that still goes in the win column because it's about the habits that you're developing. The end result is going to be the end result. But if you can develop the right habits over the long term, you'll win more than you lose. The edge will play out in your favor. But it's about the process, right? And so mapping out the process and focusing on that, not the dollar amount, right? And that's why Benny talks about all the time, pips and percentages, because if you look at it from pips and percentages, it removes that emotional attachment to the dollar amount in the money, right? It's just about the percentage. Am I willing to risk 1%? Yes or no, right? And so then the other question for you to think about is what emotional attachment do you have to the dollar amount that you could potentially win if this trade goes in your favor, or the dollar amount that you could potentially lose if this trade goes against you, right? Is that money going, are you planning for that money to go towards something specific? If we are, that's also an attachment that we need to disconnect, right? Because when we add those additional attachments to it, now we're tying all of our emotions into this one trade. I have to make this one trade in order to do. No, right? Because again, this isn't a get rich quick thing, it's a process, right? It's a compounding thing. And so we got to walk our thoughts back and walk our emotions back to be able to put ourselves in a position to focus on the process, not our emotions. Does that make sense?
Yes, extremely. And thank you very much.
You're welcome. You're welcome. So hopefully that
Hi,
helps.
Ryan.
Yo, what's up, Jim?
Oh, just a quick question on the prop account and personal account. Is it possible to trade your personal account as if you trade in the prop firm account with strict
Sure you can.
daily drawdown and maximum drawdown and
Yeah, you can.
or you just
It'd be you building that into your process though, right? You're not able to necessarily put those rules into a platform, but yes, you can, right? You can definitely give yourself a daily drawdown limit. Write it into your trading plan. If I lose $250 in a day, I'm done trading, right? I cannot take another trade, right? Um, you can build all of that into your trading plan, right? To really build that strict discipline for yourself through the process. Absolutely.
okay, thank you.
Yep, you're welcome.
You absolutely should.
Yeah, yeah. Forcing the discipline, right? Because if
Yeah.
you're able to force that discipline, right, when you actually get that capital, the habits are already there. So the capital doesn't, the process doesn't change. Go ahead, Benny, my bad.
Yeah,
No,
so sorry.
no, go ahead, Jeremy.
Yeah, so what I've been doing is I have like a prop firm account that I'm working on to get passed, and what I've been doing is anytime I I make profit, I add my profit into on top of my risk, and I increase my risk. I don't know if that makes sense.
It makes perfect sense. So
Mm-hmm.
if you have, say, a max drawdown of $500, and then you make $200 on that account, that's now $700. So you rework your math off of that.
Yes.
Yep.
Yep, absolutely makes sense. Were you gonna add something to that, Benny? To the original thought?
No, I just think it's good to have that discipline. If there's anything that prop firms teach you, regardless, right? We know that some of them are having a lot of issues, but that doesn't eliminate the fact that it teaches you to trade with great discipline. You know, a lot of times people will say, "Well, I would have traded a lot better on my own account. Like, well, on my own account, I would have still been in that trade." That's a lie. You're lying. You're
You're lying
lying.
to
You're
yourself.
lying to you. You're lying to yourself. You're lying. What would happen is that you would blow your account.
Mm-hmm.
So we have to be honest with ourselves. That's not true. Like, and that's what stops us from getting consistent. Is that we're not even consistent in telling ourselves the truth.
Facts.
So just some things to think about. Well, if I didn't have this drawdown limit, well, yeah, all your money would have been gone. That's what they're
Mm-hmm.
trying to teach you. And that discipline. No investor. So think about, like, if you need capital to play in this game. Okay, that's another myth. This flipping $200 to 6 million, like that's another. It's a myth. You need capital to play in this game. There's opportunities out there for the capital. If you're willing to put the time in, like Ryan and I always talk about, 3 to 5 years. Can it happen before that? Yes. But for major opportunities, if you could just work to build a track record and develop that discipline, right? The capital is out there, right? It is an amazing skill set. So there are people that are willing to invest, but no investor is going to invest in a trader that's risking 15, 20% on a setup, 10% on a setup. No, 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 because it's not sustainable. We're talking to we're building a relationship with a major, you know, uh hedge fund type of organization now. And it's just like all of these people saying, you know, 10% a month, 15% a month, I made 30% a month. Like, they've gone through thousands and thousands and thousands of traders, and nobody's been able to do that consistently. Nobody has been able to do that 10, 12% in a month consistently. It's not happening, as they'll be all over the front of the New York Times.
Facts.
So that's all I'm saying, right? Like, just be honest with yourself. The parameters that the prop firms put in, Jeremy made a great point. It's a great idea that he came up with. It's a great revelation, is that, yes, you need to be applying that to your own account.
Yep. Yep. Appreciate that. Appreciate that. Hopefully this conversation helps, right? As some of you are working on building out your trading plans, right? And working on your journaling as you're going through those processes, right? Think about these questions. Okay. Sun's coming up. Think about those questions, right? And build them into your overall trading plan. So as you're going through your daily process and the process for each trade, you think through that conversation with yourself and you bounce it off of the if then statements and the yes and no questions. And then you have the opportunity to really start to manage your emotions. And then you're able to ask yourself the questions when those emotions do come up, what are they attached to? Where do they come from? And you're able to then have that conversation more authentically with yourself. Right? I attached this emotion to this because I experienced this. Right? And then literally ask yourself, when you feel those feelings, when is the first time that I remember feeling that way? And you probably won't remember the first time you ask yourself, but continue thinking through it. When is the first time I remember feeling this feeling that I feel right now? Right? And then you'll be able to go back through your thought process and through your experience to then identify the moment that you first experienced that feeling. And then you can walk yourself to current time to say, today is not then. And you're able to change the narrative of that conversation with yourself. You're able to change the label of that experience to understand that that's not who you are today. Right? So that's literally the process that you can go through to filter your emotions and filter your experiences, to learn yourself better, to learn about your experiences more, but to then also be able to grow and evolve, not just in this trading space, but in life. All right. I dig it, Joy. Yeah, we do. We do. Benny guys, we'll go back and find that video and get that broken down for you too. Final thoughts for me. I'm behind on getting the training uploaded for you guys on the cloud, but my goal is to have that done at the latest by tomorrow. All right. I got it working through some of my final processes, and then it's just about uploading and getting everything into the platform. So we will have that for you by the end of the week. Benny, anything before we wrap it up, bro?
No, sir. Great session as always. Have a great day, everybody.
Appreciate it, man. Good people. Have a phenomenal
Thank you.
Wednesday. You're welcome. Have a phenomenal Wednesday. We'll be back at it tomorrow morning at 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Benny Allen. Until then, we'll see you in the community. Peace.
Thank you so much.